here we are, another edition of Super Prime UK. James, how's things? What have you been up to?
Yeah, really good, thanks, Rob. It's been a busy couple of months of me, actually. I've been away on holiday, took some annual leave. It's been my birthday as well, and back to work, fresh from the Traitors final this week as well. A lot of people have been watching that, so I won't give away any spoilers to what happened. I thought there should have been a few more mentions of the charities in that, though. Actually, there wasn't much discussion about that. That's the only thing I was slightly disappointed about. But I think the main news, Rob, is the budget at the end of the month, autumn budget, second Labour budget that we'll have. Lots of predictions. I think some of the main predictions are going to be around sort of personal taxes, but I think there's obviously going to be possibly some property taxes which are going to come in, possible national insurance on rental income and how landlords may pay that. They currently pay income tax on rental income, but there's not national insurance contribution, and we're not sure if that will come in, but if it does, it'll be whether that's on the basis of sort of on a personal basis or a company basis. So there is some possible tiering there, should that be one of the property taxes which comes in. Any sort of positivity, Rob, in terms of any possible things from the budget which we might be anticipating that might fuel a little bit of housing activity, or maybe some more construction? Or
I think we can only hope. The messaging and the noise coming out at the moment, unfortunately, isn't positive. I'm, a positive person, and I very much hope that there will be some stimulus for the property market, for the housing market, to get us moving in 2026. So I'm hopeful. At the same time, it is clear that the rumours and noises don't sound as positive as we would want them to be, James.
Yeah, I saw this week as well. Andrew Bailey, the head of the Bank of England, was obviously questioned on the prospective budget as well, and especially on the back of the decision to hold the base rate at 4%. He wasn't sort of drawn on that, rebuttaling that he can only comment on current policies there. So, like I said, much anticipated at the end of the month, and we'll see what that brings. We'll do a later show with a special bringing some of the news and impacts of that. But I think that maybe takes us through to the base rate. Obviously, a very tight vote from the Monetary Policy Committee. 4 voted for a cut and 5 voted to hold. So only 1 vote in it, Rob. So we're teetering on the balance there. So held for a second consecutive time. There is one more Monetary Policy Committee meeting prior to Christmas, quite late on the 18th of December. So we'll see what happens there, possibly an early Christmas present for borrowers. If there was a rate reduction to, say, 3.75, wouldn't anticipate anything more than that. That would help those, looking to refinance in the new year, and also those on the tracker mortgages. So wait and see what happens there. Any prediction there, Rob?
Well, I do think the fact that we know the vote was so close, and remember last time there was a casting vote that led to a reduction, this time went more or less the other way. So I think the positive signs are we can expect there will be a minimum of a 0.25 point reduction in December. And strangely enough, if the budget is perceived to be really negative, there's even the chance that there'll be a 0.5 point reduction to create some stimulus going into 2026. So I think where we stand today is it's not a question of if there will be. I think it's there will be, and it's how much.
Yeah, possibly a reactive change there, which we might see. And just in terms of other key fiscal indicators, with inflation remained at 3.8% in September, and the Bank of England did comment on this. It's well above the 2% target, although the bank is confident that inflation has now peaked. So hopefully they're saying in early 2026 we're going to be down towards the 3% mark there. So another positive economic indicator, even though I think the economy is quite finely balanced at the moment. There is some mild optimism in terms of the economic performance there. So, Rob, in terms of mortgage approvals, some positivity there, which is also an indicator of future borrowing, what the pipeline is. For September 25, an increased month on month of 1,000 up to just under 66,000 mortgage approvals. So that's actually the highest in 9 months and above some of the market expectations, which were about sort of 64,000. So I think that's a real positive figure there. I think particularly here in London, I think we experienced a little bit of a quieter August, which also fed into September, and I think things in October last month picked up, Rob, from what we saw on the ground in terms of activity in the market, and that to some degree ties in with the data we're seeing here for September. We're still sort of we're down on what we'd see in a more active market. We'd be up towards the 75,000 mark, but I think it's a good positive indicator that the market is still functioning.
Yeah, I think like in previous shows, remortgaging has been strong this year. Hence, mortgage approvals both for purchases and the refinance market have been pretty steady, and as rates have come down, that's improved the market for lending. And we discussed earlier on in the year about how gross lending was up on previous years in both the house purchase space and remortgaging. In super prime world, the strengthening of the remortgaging market and refinance has continued this year, and with a slight decline in purchase and acquisitions, it's the refinance market that will continue to see remain strong for the rest of the year.
Thanks, Rob. And just in terms of pricing, we're at in terms of the mortgage market, I'm not sure I'd call it quite a price war yet, but I think there's some competitiveness within the market there. And the cheapest two-year fixed for someone moving house with a 40% deposit is actually down at 3.64%. You can get that with Nationwide currently. Or the cheapest 5-year fixed is down at 3.89%. So quite a few sub 4% deals now, which obviously, is maybe factoring in some of those future rate reductions, possibly in December, and then the current cycle, excluding the last one, has been every other meeting. There's been a quarter point drop. So it's just what point we'll find the base rate settling.
Yeah, I think that's really good stimulus. I think that outside of the budget, actually, rates reducing, affordability, better offering to the market, both for refinance products, and for acquisition, is what we're looking for in 2026. And I think that's good news for the lending market.
Thanks, Rob. And then just in terms of some holistic data for not necessarily London, but the UK as a whole, Nationwide and Halifax released their house price indices month on month, with Halifax reporting that the average house price in the UK has hit a record high, the highest they've ever seen on their HPI, just under 300,000. Values have risen at their fastest pace since January. So again, pointing towards a slightly rejuvenated market if we take the UK as a whole, which also aligns with the mortgage approval data which we mentioned earlier. So those two pieces of data tying in quite well there. Annually, the average price of a property is at 1.9%, which again is a jump from the previous month of 1.3% recorded. And according to Halifax, their home loan approvals have reached the highest level this year. So all points to quite positive data there if we take the UK property market as a whole. Yeah,
I think very nuanced market. The UK has performed well this year, hence those price records being achieved. Last year, the last quarter of 2024 was a bumper quarter for super prime transactions, and we've been tracking those numbers, and this quarter is significantly lower in the 2 to 5 million, 5 million plus, 3 million plus space as the nervousness goes into the budget that we're awaiting for. So mixed messaging there. Yes, the country at the lower level is performing and there are price rises. In super prime world, apart from the ad hoc Middle East buyer that has continued to perform in the market, there has been a slowdown in transaction volume, which is non-comparable to quarter four in 2024. And we've already discussed the reasons why.
Yeah, I think the London market has plateaued largely this year, been not quite stagnant. There has been transactions happening, but in terms of price movement, it's been very, very minimal.
Let's close out today, James, with a bit of Champions League. British clubs, or should we say English clubs and not British, had a storming week, undefeated if I'm not mistaken.
Yeah, some really big games this week as well. Surprisingly, PSG got unstuck in the Champions League. Bayern Munich, they look like the team to beat this year in the Champions League. I don't know what you think.
I think Real Madrid, Liverpool, Arsenal, Bayern Munich, Barcelona.
I think if City get a little bit more consistency, they could threaten as well. It's just that inconsistency, getting Rodri back in the team, hasn't really sort of had a run of games or hit the same form. Crystal Palace last night as well. A win at home in the Europa Conference League. Yeah,
as I said, all the English clubs went unbeaten this week, which is a major achievement and just shows that English football is at the forefront of European football now. And I mistakenly said British, but unfortunately
Celtic had a slip up.
Celtic and Rangers didn't perform, and they're unfortunately not producing.
A man sent off Celtic, I think, a bit unlucky.
All right, good catch up for today, James. We will have one more edition before the year is out, the Christmas special, and I'm sure we'll have a few bonus surprises and presents and gifts for you to see the year out on. Thanks, James.
Thanks, Rob. Thanks very much, everyone.